So this is the first background information where they are discussing the background information that the company's year end is 30th September and it is 1st July, and the details of the exhibit is given. Now, the next exhibit. Yes, that is the email from the partner to the audit manager, and it is same, everywhere. So from, to, and from, and date. So hello, I attended a planning meeting last week with the finance director KH of Speedy Style Company, at which we discussed business development during the year and plan for the future. I have provided with you my notes from this meeting as well as some background information about the company from the permanent audit file. Now, this is indicating permanent audit file means the company they were auditing before. So audit firm is already, they have been the auditor of Speedy Style Company. That's why they have some information, background information in the permanent audit file. I've decided to use profit before tax. So profit before tax is to be considered as a basis for calculation of materiality. Okay, now using only exhibit 2 and 3, evaluate the significant business risk facing the company. Using only exhibit 2 and 3, evaluate and prioritize the significant risk of material misstatement to be considered in planning the audit. So for the time being, these two topics we have to discuss. These two part of the paper. Around, you see here, there are 26 marks. There are 26 marks over here. Which are technical marks. And you know that this total question number 1, it is 50 marks, out of which 10 marks are professional marks. So in other words, we can add easily 5 professional marks to it. So around 31 mark question it is. And let me tell you, it is very difficult to pass paper of AAA if you don't perform well in this question of your exam. Remember that in this part. Because 31 marks, you can gain very good marks and they become a sound foundation for you to pass your paper. Now, let us proceed further. So business risk, how to discuss the business risk. Business risk is basically, there is a framework which I have developed so that each business risk is 2 marks in exam. For example, if there are 10 marks part on business risk, it means you have to write 5 business risk you need to explain in exam. But the point is how to draft answer on each business risk so that you can get full 2 marks. So CEI, that is a framework while you are explaining each business risk. So C is condition. Condition means you are calling something as a source of business risk, some issues, some facts from the scenario which may cause business risk. So you have to quote those facts, quote relevant numbers. And that factual situation that causing the risk for the business of company. First of all, these facts should be fetched from the scenario. And then you have to show consequences. That which situation and how if these facts may turn into a business risk. Some facts may be there. For example, company is dealing in international business. But how it may become a business risk, management may not have previous experience. Because scenario is telling, for example, it is first time international venture. So this information from the scenario. Or the laws and regulations may be different over there. So, what are the situations which may turn? You may find some information from scenario, most likely, which may, this is very much important. You cannot directly say that company is going international, so it may face loss. You have internationally doing business is risky, but what are the risks specific to that scenario? For example, in exam scenario, this why I am focusing here, why I am asking you to see this from scenario. Sometimes scenario says the international business they are going to do in a country, in other countries, currency is same. So you cannot discuss in your exam this company is going international and there is business risk for them that a currency exchange currency rate may change and they may face loss on the payments on the receipts because of exchange rate difference. You cannot say that. That's why I'm telling you, you need to focus scenario, try to fetch only those points which are relevant to that point, that the scenario. Now, what will be the impact on company business? What will be the impact? That may be financial impact, most likely. Financial impact. Now, what is financial effect? Profit may go down, cost may go up. Reputational damage is ultimately, that is also financial, that turns into financial damage. When your reputation is damaged, you may not be able to sell goods. Your customer may leave you. Your supplier may not provide you the goods on credit. Okay, so profitability decline, cash flow pressure may be there. That might be the point. So for each point you identify, you need to explain. Okay, these two things. Condition, you will find it from scenario. Some information about this as from scenario. But how the negative impact may arise, you need to link all these three. Now, we will be talking about it when we'll be going through this scenario. Online sale return policy. Speedy Style Company has a high level of customer return concern, which a return policy of providing the customer with a full refund if the clothing is returned within 1 month from the delivery date. So return policy is there. With the in the original sale condition, no refunds are provided for the clothing return after the 1 month return window. Last year, Speedy Style Company recognized 50% of the final month's sales in the year-end accounts. And this year, management has estimated 40% of the month. Now, this return policy can be business risk because high return, fashion related products are there. And it can be risk of material misstatement because they have reduced the value of amount of return. Okay, so let us try to understand. So high return, so there is, what is condition from the scenario? The first point, this is business risk we are going to discuss. So what is the condition from scenario? What is the issue from scenario? The issue is that the company is offering full refund policy and within 1 month, and it is fast fashion industry, there is high volatility, so fast fashion changing, so customers may buy, may return. Okay, possibility is there due to fashion change, maybe within 1 month. So now, so what will happen? So stock may become unsellable at full price, and when it is returned, stock may not have the same value. High return cost to the business. So revenue and profit fall. Cash flow decrease. Inventory write-off may increased. So you see here, I told you CEI. Condition, which is issue from scenario. And what is evidence which is causing I for impact? Impact on company financially. This is impact. Inventory write-off, revenue fall, profits fall, cash flow impact. But how it is happening? Evidence. What it is causing? Increased costs. Okay, it may not be saleable afterwards. Now let us go through the exam answer, that how to write this answer. There I have written this answer in front of you. You see here, they offer a full refund on the company all sales within a month of purchases. If customers are not satisfied on their products, whether due to quality issue or even just a change in fashion trend, there could be large rise in return which would adversely affect. This is impact. This is evidence why it may occur. This is issue from scenario. C, E, I, impact on business, finances, cash flows, profit. Additionally, there would be a cost to the business processing the return and determining if the goods are still saleable. Further, evidence. You have to provide evidence. So the clothes are only, or of the fashion, the clothes are only saleable. There may be or reduce prices, which will again impact revenue and profit. So impact. This is again evidence. You are building evidence that how this impact may arise. You are giving the logic, right? So let us come back to the same point. So this is how the students normally they write condition, they write impact, but they do not discuss how this impact may arise. They write generic things instead of scenario specific. This is called commercial acumen as well. That this is practical thing we are talking about. Now, so this is what students miss, and they miss marks actually. Now, come back to the same place. Now, so student, this point I told you, it can be risk of material misstatement as well. How we will talk about it when the time will come, means after this part. But just I'm identifying, right? Next. The next point is, currently all of the country's executive directors roles are performed by Hadith family's members. One family is performing all the roles. And board has no separate audit committee. There is only one non-executive director who is a friend of the family and whose primary employment is a school teacher. The director of Speedy style company are planning to list the company on the stock exchange the next year. So company is going to be listed, and if we see the whole scenario, their revenues are also growing. I cannot, let me try to take you to the next slide here. Yes. Okay, we will go to that. Just let us discuss it first. So this can be discussed as business risk, can be discussed as risk of material misstatement, both. How? So first of all, business risk, condition, evidence, and impact. So weak corporate governance is the business risk. So what is the condition? The condition is that family only board is there, only family. No audit committee, weak non-executive directors structure. So what can go wrong? Poor oversight, lack of challenging at the board strategies, risky decision, not properly scrutinized decision. Now impact, because we are talking about business risk, impact on the business because of it, mismanagement. Okay, right? And business maybe have inefficiencies as well, which is not given here. I have explained it in the detailed answer. Inefficiencies, increased cost, full potential may not be utilized. So here it should be written, you see, corporate governance. Speedy style is a large private, you see the same issue from the scenario we have picked. So it is a large company as indicated by the scale of its operation and size of its revenue. A wide range of skill will be required to ensure optimum running of the business. Otherwise, operation will be subject to this is impact. Cash flow will be affected. Full potential of the business may not be realized. So this is C. Company is going to be listed. Okay. So C, E, and I, impact. This linkage, this in-depth analysis that why companies may have, why business may have inefficiencies. Because skills may not be there. Scrutiny may not be there. Challenging of decisions may not be there. Okay, let us come back to the same point. Now, the next point is Speedy Style Company has purchased 5 established brands in the previous 10 years and utilized Speedy Style Company's existing online sales, marketing, distribution department to integrate these purchased brands into their multi-brand business. Therefore, but before the year end of the 30 September 2025, Speedy Style Company is expected to complete the purchase of brand of Kerr Company, a high street retailer of furniture and home fare store, which is facing closure due to poor sales. This will be first time they have bought a brand which was previously only sold in retails with no online presence is part of Speedy Style Company. Strategy to expand fashion into homeware. Now, listen. They are going to purchase a brand whose sales are declining. And first time they are purchasing such a brand with no online presence. So what will happen? Integration issue may be there. Customer may not switch online. Possibility is there. Okay, so here let us come and talk about the purchase of car brand, how it is a risk, business risk. So let us talk about it. So yes, minimal online presence, issue from the what is evidence? Customers are unlikely to shift online. Brand already failing, weak return on investment. So revenue and profit of the company may fall, acquisition may not be successful. This is the risk and impact. Come here. Here. So this is from scenario, condition, evidence from the scenario. Customer may not readily transfer to online. So acquisition may not prove successful. Decrease in impact. This is E. The risk of business will heighten due to the brand is not performing as expected, which could be indicate a brand which was already failing and which may indicate that they have reduced chance of success from integration, which is already failing. Integration may not be beneficial. Now, so secondly, the second risk from the same point, come back to the here. Sorry. Yes. Now, this point is risk of material misstatement as well. Okay, right? It is risk of material misstatement as well. Now, so there is another point of risk. Expansion into homeware. They are going to homeware business, which is not their current business. Diversification they are going to do. Their current business is speedy fashion business. So different business, different customer, different dynamics may not be able to manage things and impact. So when you are going into completely different business and then to different business, you may not be able to manage together. The management time will be divided. That's another point aspect. So come here, let us discuss its answer. So Speedy Style Company, sorry, here, the next is, yes, here we are. So Speedy Style is intending to expand into homeware sale. This is a new area for Speedy Style Company and it is not guaranteed that will be, yes, what is the risk? This is new area, evidence. Expected return may not materialize. Failure to integrate. Now, the next point is, so yes, home fare products are more vulnerable to damage in transit than clothing. Current business is clothing, fast fashion. So when they shift furniture online, so cloths are not damaged, less likely to be in transit when they sell goods to the customer. This is called commercial acumen. Okay, right? And then this is commercial acumen, practical thing. And then for the further risk is that management team will require significant time. Two things they may not be able to manage together. Time will be distributed and divided, and it may affect them badly as well. Next. So the next point is yes. So there is another point which I have not highlighted only. This is the risk of material misstatement. Yes. Now come here. A prominent news organization recently published an article revealing the poor working condition of employees in Duff Company, a clothing factory which exclusively supplies Speedy style company. The news article has been published widely read and shared on social media. So there is high risk. Reputation damage will be there. Okay, right? Now, so yes, here we are. So the point is, factories exclusively supply Speedy. Poor condition of worker over there. This is condition. What is evidence? It is widely reported social media, strong reputational backlash, impact, reduced sales, cash flows, long. So your business risk you have written, it should have three components. Now, this shipping delay matter. In May 20x5, a large container ship which was carrying inventory owned by Speedy Style with a value of 847 became stuck in a transcontinental shipping canal. The clothing on the container ship was due to delivered in June but is now expected to be delivered at the end of August. June to August. This caused a delay in shipping style company being able to distribute the cloths for the short summer season, June to August, affecting 30% of their online market. The finance sector is optimistic that the clothing which had already extensively marketed ahead of the proposed launch in June will still be saleable at full price. Okay, this is the risk of material misstatement I told you. Recording of inventory. But this delay which had to deliver in June is going to be delivered in August. And season is almost already over. Fashion may not be there as well. So customer may not buy it now. It may not be saleable at same prices. So here it is the answer here. So now shipment delayed 30 months. Arrives after summer season. So stock outdated. And now this is what I have found from the financial statements. Profit margin, and I have written here that decreased. So lower revenue, cash inflows, and customers say that this company does not have the goods in time. So how to write this answer? Here is the shipping delay answer written in front of you. So what is the condition? Shipping delay. It is fast fashion industry rely on goods available. They are available for the summer season. 3 months. So now this is evidence from the scenario. Customer may buy from the other seasons. So hence this is impact. You see here, cash inflow decreased, revenue decreased, profitability decreased. Right? Now. So supplier working condition, the other point is here. So the article published, this is condition from scenario. What is the issue? So impact, this is condition is impact, loss of revenue, negative publicity. But how this will arise? This is the point. This is the evidence which you need to write. Explanation. The customer may decide to restrict from a company linked to poor working practices through the supply chain. Okay? And this is compounded by the fact that the factories are exclusive supplying Speedy Style. This is evidence. This is the basically which actually brings you mark. Majority students discuss the issue and impact. Rather, they don't link it with the proper logic and explanation, and hence they lose marks. Okay, now, next. So the next is I have discussed another point, competitive environment in the business over there. Profit margins have been calculated. They are falling, squeezing, and they are saying that there is huge marketing cost, right? Prices may need to be decreased because some goods arrived late, and hence profitability squeezed. Sustainability of business at risk. Maybe going concern may become doubtful. So in this way, you can discuss it. Okay. So I have not written its answer, just analyze it because 5 points were there and 1, 2, 3, 4, 5, 6 I have discussed. Right. Now, the next requirement of the question is here in front of us. That is using exhibit 2 and 3. Evaluate and prioritize the significant risk of material misstatement. So evaluate and prioritize. So prioritization has marks. Significant risk of material misstatement in planning the audit of financial year ending 30th September 2025. Using profit before tax as your benchmark, you will need to determine and apply an appropriate materiality. So now 16 marks it is. The analysis is first. So out of 16 marks, there will be 3 marks for materiality. Calculation, discussion, justification. So that is the materiality level. So remaining 13 marks are for the technical description and explanation of significant risk of material misstatement. So 13 marks. Now, in this question, my focus will be, I will be explaining accounting issues. Accounting issues where IFRS's are knowledge is needed and that is applicable. So accounting issues I will be discussing as risk of material misstatement, although there may be other aspects as for example analytical procedures can be used to be discussed as risk of material misstatement, analytical procedure, and there might be some generic other statements as well which can be described as the risk of material misstatement. But here my focus is IFRS. So IFRS, when we discuss accounting issues, so each accounting issue properly discussed is 3 marks, minimum 3 marks. It may increase if one accounting issue, as per scenario, there are 2 aspects or 3 aspects which can be discussed. So it may increase to 4 to 5 marks per accounting issue. So in my opinion, if I consider 3 marks per accounting issue, so 4 to 5 accounting issues can be discussed. So minimum 4. There may be one accounting issue with 2 aspects. So 4 into 4 issue into 3, so 12 marks, and one accounting issue with more than one aspect, that will be the additional 1 mark, that is 13 marks like this. That will be complete answer can be written. Now, so let us proceed further and talk about, yes. So risk of material, I have told you in scenarios, normally you find accounting issues where IFRS application is there. Okay, accounting knowledge, financial reporting style knowledge is required. Second type of risk of material misstatement is analytical procedure, where you actually calculate ratios and trends on the financial statement of company and you draw and withdraw and discuss that what are the risk of material misstatement due to inconsistent trend, unusual trends over there. The third is that is the generic statements from scenario and what they are. For example, it is a new audit client. Okay, for example, finance director was not there. For example, company is going to be listed. So these are generic statements which are actually increasing overall audit risk or risk of material misstatement over here. Okay, so we have to discuss them from the perspective of risk of material misstatement. So as I have told you already that each accounting issue is normally 3 marks. So, but for those accounting issue where more than one aspect of IFRS can be discussed, as per scenario, remember as per scenario, 2 aspects can be discussed. So it may be 4 marks or maybe 5 marks. Okay, so it is like that. So generic statement, each discussed properly is 2 marks as risk of material misstatement. Now, so how to solve accounting issue? So I'm talking about accounting issue only here. accounting issue only here. So if we find one accounting issue in the financial statements there, so we have to apply MTI, sorry, MTI. This is my approach. Materiality, M for materiality, you have to discuss that, you have to find facts of the issue that matter from scenario, discuss and compare its materiality with the overall materiality level you have calculated before. I will talk about it, don't you worry. And then identify what are the facts of the case. Now, what are the facts of the case? What is the materiality? Whether the matter is material or not. It is more than the materiality threshold calculated, or it is material by nature. We have to discuss it over here. That is a must. This is my approach. In examiner approach, the answer has the three component, but sometimes they discuss materiality in between the answer, sometime at the end of the answer, sometime at the start of the answer. Okay, so the point is follow this structured approach. So materiality first of all. Second is treatment. So now you need to narrate what relevant IFRS says about that factual situation. Only the relevant chunk of, you have not to copy paste everything about IFRS over there. Only that specific aspect of the situation you narrate. IFRS says, for example, useful life of the asset can be reviewed annually and it can be increased if the asset is expected to last longer. Okay, right? So just like that, about the useful life is being discussed over there, if it is there. Now, then you have, if case study provides specific information about the accounting treatment, that how company has done treatment, how company has done. So comment on that the treatment done by them is correct or not. You have to talk about that. Okay, if they have not discussed, the question is silent. So we will discuss risk over here. If they have not discussed the accounting treatment, they just say, for example, the company has investment property. Okay, they're recorded at this amount, cost model, at this, or fair value model. So they have not actually discussed the calculation of the amount. So you simply say IFRS says this, that it can be recorded at cost model and the fair value model. But when it is chosen, it should be applied consistent to all similar investment properties. So now the risk is that they have used cost model for certain properties, but for other they may have used risk. For other they may have used, fair value model. And then which item may be, which balances may be understated or overstated. Tell specifically. So, but if given treatment is clearly incorrect, then we say it is incorrect. We prove that by discussion, by applying IFRS. Here, student, the lose mark when they do not analyze the scenario information in the light of IFRS. When they do not discuss that, when they do not tell why it is wrong, what can be wrong, how it may be wrong, and they do not justify with IFRS application, they lose mark here. Okay, and then you have to state the risk and impact, which item specifically, maybe, for example, research and development cost, for example, even for doubtful debts. You have to tell specifically which item is will be understated or will be overstated. That is very much important part of it, right? So now, so materiality about this question, it is in front of you. They said it is calculated as per profit before tax. So first of all, you have to tell that for the purpose of these briefing note, this is how you will write. The overall materiality is based on profit before tax of the company. Like this. And you will write it. Tell on which basis it is. On which base? Profit before tax. You will mention it. Then you will write benchmarks. That 5 to 10% of benchmark of profit before tax, and it is calculated. This is 5% of profit. This is 10% of profit. And then you have gone through the scenario already when you are writing it. You have got the idea what is the situation of the company. If the company is in the critical condition, if there are so many judgments involved, if there are control failures, if there are certain, remember, note down this point, if there are so many misstatements, incorrect treatments, company is going to be listed, okay, poor corporate governance, control failures, means if these factors are present, risk is high in this company, risk of material misstatement. So we will keep the benchmark lower. Okay, right? Now, so the benchmark is only starting point. Okay, will be applied, professional judgment applied? Yes. So just see here, with justification, with the choosing of, this is justification in starting. This is existing client and we have cumulative knowledge and experience of Speedy style company. However, the proposed purchase brand and potential future listing increase the level of risk in the current year. This is justification, very much important. It has 1 mark, clear 1 mark. Therefore, materiality has to be 5% of profit before tax and has been set at lower level. This is how it should be. Now, next point. So we need to talk about different risks, that how they are. So the first point which we identified already in when we read this scenario, that the return policy they have reduced 50, this was their policy, 50% of final month sale they used to record as refund liability. Okay, refund liability. But right now they have reduced it to 40% of final month sale. Now materiality, treatment and impact. How it will be. How it will be. Now, so let us go through how to write this answer. So the first refund liability, you will give heading like this in the answer. Okay. The first thing, yes, the facts. The fact from the case. Likely to have a high return that within 30 days. They are fashion business, made sales online. So right. So now what IFRS says? IFRS 15 requires to estimate the expected level of return and refund liability to be recognized for the cost of inventory item expected to be included. Yes. And it should be excluded from the cost of sale. Inventory should also be adjusted for any potential impairment. What IFRS says. Now applying to scenario. Here they have recorded a refund liability but has reduced the refund liability. And there is no apparent basis. And there is risk that this refund liability may be insufficient to cover the potential refund. Now you see here. What we said, the facts from the case. Then we said what IFRS says, relevant only to that. And then this is, I have highlighted it. This is application to the scenario. Okay, reference information. So they have, so this may be insufficient, this liability. Now, what is impact? Here is risk that revenue and profit will be overstated. And liability, why liability? Because refund liability is understated. When revenue is overstated, profit will automatically be overstated. So specifically which item? So you see here, this is facts from the case. Materiality, it is already discussed, 10% reduction of that. Okay, right? So then what IFRS says, treatment and applied to scenario and impact. Now, let us proceed further. You just see here, there is something additional to it. Now this is called critical thinking, professional skepticism. It will give you one more mark, additional mark for it, professional mark, which is called professional skepticism. That the area of judgment, this area of judgment, refunds, liability, and directors are looking to list stock exchange in the future and may be motivated to present a healthier financial statements by reducing the liability, increasing the sales. Hence, liabilities may be understated, and this is called skepticism now. Okay, right. Next. So I just see here materiality effects, treatment, and impact. And this is called scaling the risk. Okay, scaling the risk, where you get professional marks. Very clearly evident. So second issue, that is risk of material misstatement. That is the poor corporate governance structure where there is no audit committee, only one executive director. And they are planning to list as well. So no separate audit committee. So now this is basically which is 2 marks point. Okay, now how to discuss it as audit risk? Because there is no accounting issue, we have to explain how it is, risk of material misstatement. So let us proceed and go through its answer. So first of all, what we will be doing is, that is, here. So we will be writing like this, that Speedy style is unlisted and run by, so this is facts from the case, right? Family members without oversight from audit committee, only one non-executive director who is not financially qualified. So first of all, second, hence ineffective corporate governance structure may mean that these areas of financial statements are not sufficiently, because it is the job of audit committee to scrutinize financial statements, the process of preparation of financial statements, to monitor integrity of, this is the job of audit committee. So hence thus increase the risk of material misstatement due to poor governance from a director level and lack of knowledge of complex accounting treatments. That's the point. Now, now the point is here, this is demonstrated. Now, this is evidence from the case, very important. Very important evidence from the case, that this is demonstrated by incorrect accounting treatment applied to delayed inventory transaction. Another incorrect treatment from this is very much important. If you will not write it, you may not get 2 marks, I'm telling you, because you are actually linking that its impact is coming over here, how misstatements are occurring. So issue from the scenario first of all. The second is impact on financial statement, how it is coming, and evidence from the scenario. For generic points, general statements, which are 2 marks, I urge you find such justifications from the scenario. It will add the credibility of your discussion, that what you are saying, it is happening here. Okay, like that. So the next is, the point is purchase of curve brand. They are going to buy, which is risk of material misstatement as well, which is a high street retailer of furniture and homeware. And it is facing closure due to poor sales, no online presence. So, and you see the value they purchase is 3 million. Now, already it is struggling. They have purchased for 3 million. So it might be impaired. It is still at cost. Newspaper suggesting it is overpriced. And they have not amortized it. So there are 2 issues in it. First of all, is the issue of impairment, right? Of the brand. It might be impaired. Impairment loss should be charged, because it is already due to poor sales. It is facing problem. So they have purchased 3 million. The newspapers are already saying it is overpriced. Second point is, so impairment loss may not have been recorded. This is maybe the risk of measurement. Second, it is not amortized. Purchase brand. Whenever you buy a brand, it is intangible asset. And intangible asset, especially brands, they have a limited life. It is not the case that there will be economic benefits coming for the foreseeable future, means for the indefinite period. It is not like that. There is normally estimated life. So the second is amortization of the brand. So two aspects. So in this way, it can be 5 marks point. So 3 marks of the impairment and 2 marks for the amortization. So let us proceed and see how to apply MTI, materiality 3 million. It is much above the, we can say, which is 400,000 materiality level. It is material. First of all, M materiality is here. Then we will write what IS 38 says, that assets with indefinite life are tested for impairment. Okay, and when there is indication for impairment, such as fall in demand, so there is sale is already reducing, so it must be impaired. An asset is impaired when when the recoverable amount of asset is less than carrying value. And what is recoverable amount? Recoverable amount is higher of fair value less cost to sell, and we know that it is drawn like that. So recoverable value of any asset, it is, if it is less than its cost and it is recorded, it is difference is called impairment, this difference. And how recoverable amount is calculated? This is calculated, it is a higher of two things: fair value less cost to sell, and less cost to sell and value in use. The value in use is present value of future cash flows. It is fair value at which it can be sold in the market, less selling cost. So higher of these both is called recoverable value. And if this recoverable value is less than cost, the difference is called impairment. Now, this is what IS says. Now, we will be proceeding towards and applying this criteria to the scenario. So, what scenario says? Now, so the brand purchase from car company which is facing closure, no online presence. Now, this is justification where there are some suggestions that it is overpriced. Raise the risk is that its carrying value may be impaired. It should be tested for impairment, and impairment needs to be charged if its carrying value is greater than its recoverable value. But it is held at cost. It is held at cost. Now, so we have applied to scenario. Now, what is the risk and impact? The risk is that intangible assets may be overstated impact and impairment loss being understated. So you see here, materiality comes here first of all. Facts plus materiality we discussed in the first line over here. And then comes the treatment, and which is applied to scenario, then what IFRS is saying and applied to scenario. And then comes the impact on financial statement. This is how the answer need to be written. Now, next part, because we said it has extension, 2 marks extension, that is amortization. So what IS 38 says, that intangible asset where there is indefinite life. That means, what does indefinite life mean? No foreseeable limit to the period over which asset is expected to generate cash flows. But this doesn't, now applying to scenario, this is not the case. Cannot be justified for a brand name, okay, which is purchased. So they should have amortized the brand over expected useful life, but they are not amortizing it at all. So hence, impact, intangible assets are overstated, amortization assets are understated. So now 5 marks in my opinion. These 2 points to club. So one issue, 5 marks. I told you accounting issue can have 3 marks minimum up to 5 marks maximum. Now, yeah, the next issue we highlighted, that is related to risk of material misstatement. That is the delayed inventory, which is actually stuck with the value of 840,000, which is material. What was the materiality threshold? It was 440,000, I think, or 400,000, if I'm not wrong. But above that, so it is material. So became stuck. So, and we know that it is a fashion industry and it is related to summer. They said that end of season. Now it is expected to deliver at end of this. So it is related to summer season. Okay, now it is affecting their sales, but it is, who is saying that? So finance sector is optimistic that it is still saleable at full price and not written down. So what is treatment? IES2 says that inventory should be recorded at lower of cost and RV. So summer season is going to end at the end of August. And the whole season gone, customers now may not purchase it. But the finance director is saying that it is still saleable. So treatment we are talking about basically justifying. So they have held it at cost. Rather, it should be written down. It's NRV should be assessed, reassessed. So this is the point. And what is impact if they have not done it? If they keep it at cost, so inventory will be overstated. Let us read the answer that how MTI is applied to this point. First of all, materiality. Yes, materiality, M. Now, so above the materiality threshold, so it is material, M. The next is what IS2 says. Inventory should be held at lower of cost and RV. Then applying to scenario, justification, which I always say it was one of the most important part to get maximum marks. To the delayed inventory, the risk of obsolescence, fast moving nature of fashion trends, and it is related to season, and it is reaching at the end of season, August, are less likely to sell. So therefore, achievable selling price will be much less than originally intended. So product may not be able to sold at all. Some may be. So its NRB may be less than cost and inventory. Now you see justification, building the case, discussion that how it is. Now we are not doing it by force. We are discussing the points mentioned in the scenario. Some students try to do it by force, by visualizing what is not mentioned. Do not do that. Okay, now, so what is mentioned in the scenario? We have picked those points. Now, so the next point is, but the management has not made any adjustment to the valuation of inventory in financial statement. So what is the impact? Overstatement of inventory in financial statements. Now, this is called scaling the risk, spreading, skepticism. Right now, so here is a risk that future listing that company is going to be listed. So we are connecting dots that so in order to show better financial results, more attractive financial statement to potential investor, they may not deliberately written down it. Hence, profits and assets may be overstated. Now, analysis of the question. So here we are. So materiality, M. Treatment applied to scenario. Impact on financial statement here. And scaling the risk. Linking. And this brings you this discussion and this scaling, it brings you professional marks, analysis and evaluation, skepticism. These bring you these marks. Now, let us talk about that. What should be the format of this answer, which we have discussed already, because there are professional marks associated with the format as well. And so then let us proceed further. Now, so first of all, you will start like this. Response. It is a response to the email, briefing notes in the form of to, from, audit manager, subject, and date. Next, then you will write introduction paragraph. Introduction paragraph is actually tells a brief overview of the requirements which are going to be discussed and analyzed in the answer below. So briefing notes has been prepared in the audit planning. The first requirement, evaluation of business risk and evaluation and prioritization of the significant risk of material misstatement to be considered. Principal audit procedures using data analytics. Now, inventory in respect of inventory and ethical threats and professional issues. Okay, so do you see here there are 4 requirements. So 1, 2, 3, and 4. These are 4 requirements of the question which I have given over here in the introduction paragraph. Next, afterwards, evaluation of the first requirement, business risk, will be, there are 10 marks for the business risk on this question. You will be discussing only 5 out of these, only 5, 2 marks each. Then comes the risk of material misstatement, second requirement. It will be like that over here, that first of all, you will be discussing materiality. 3 marks materiality, calculate, benchmark, and justify which one you're choosing and why it is. 3 marks. And then you will be discussing the risk of material misstatements here. Then conclusion on prioritization, that how you have prioritized. Prioritization can be done 2 ways, and I follow both. First of all, you discuss all the risks in the order you find. Then you just copy and paste and rearrange them. Put first one with the highest amount and highest probability, which have a higher risk of material misstatement as per the scenario, greater degree, greater amount involved. Put first one that, then the second, third, and fourth, like this, in the same order. Okay, so then how it is written. The risk of material misstatement has been prioritized with estimated magnitude and likelihood. So explanation, for example, impairment of brand is the highest quantitative area, highest risk of material misstatement, and there is a significant risk of management bias in it. Inventory valuation is the second, high risk. It is very important, and obsolescence chances are high here. The sale return and they are followed like this. So prioritization, if you write, you will get definitely 1 mark minimum. Okay, so we arrange them and we write this conclusion paragraph, that which one is the first, second, third, and fourth. And then you will write the C. Afterwards, you will write the C part, data procedures on data analytics and ethical issues as well. So like this. Okay, afterwards. So conclusion is explained here, then data analytics procedure and ethical and professional issues are discussed over here.